Welcome to our webinar today, where we're going to be talking about legal and risk considerations you should be thinking about when you're looking at your compliance framework. Bear in mind that we are still in strange times and working from home, and so there may be rogue children, pets, spouses. I think we've had some bin trucks as well beeping away, so do bear with us in the event of any strange additions. And speaking of strange additions, I will introduce you to our panel. So we've got a fantastic panel with us here today, who hopefully you can see on the screen. From EY, we obviously have myself as your moderator for the day, but then we also have Mariam Hussain and Emma Brown from our forensics practice. So Mariam has spent the last 20 years of her professional life investigating fraud, corruption, anything from mis-selling of financial services products in the UK to tracing £500 million of funding that was intended to one of the poorest countries of the world. Emma has got 10 years of experience working in investigations and compliance. Her sweet spot is really around helping companies to build and implement data-led compliance programs. That's our EY side. On the Outer Temple Chambers side, we've got two fantastic guests with us. We have Fiona Horlick, QC, and Jeremy Scott Joint. Fiona is a QC, as I said, with wide-ranging expertise in financial crime, regulation, and enforcement. She's a co-editor and major contributing editor of a leading work on the Bribery Act. This is now going into its third edition, and I'm sure will be available in all good bookshops very soon. Fiona advises companies with regard to business crime, in particularly bribery and corruption matters and money laundering. And Jeremy is a barrister specialising in commercial matters, business crime, and financial regulation. Before he joined the Chambers, he ran an investigations and compliance program at two large international banks and worked in intelligence at the FSA. He's a specialist in preventing and investigating fraud and bribery and corruption. So we have a fantastic panel here with us today. And really the purpose of the discussion is going to be for them to share practical insights that they have from working with their clients in the real world, to talk about how organisations are navigating different issues they're facing to have a strong compliance framework. Now, when we talk about these issues, let's think about the context in which we're talking today. So there's been a lot of discussion recently about COVID-19 and all the challenges that this has presented to businesses, their supply chain, health and safety, remote working, and the very uncertain times that we all feel that we're now working in. But actually, I think as legal risk and compliance professionals, we all understand that most times are in fact uncertain, and that really what you need is a robust fit for purpose compliance framework to help understand and anticipate this. The area that we're in now, I think, stresses the need more than ever for approaches to be practical and pragmatic. They need to be sensitive to commercial demands, but we also need to not lose sight of our primary goal, which is safeguarding the business. This can be difficult when you have shifts in organisational priorities and when you find your business coming under extreme financial pressure. It can be tempting to take your eye off the ball and reduce your focus on ethical decision making. Now, we all know that this is dangerous, especially at a time when companies are being judged now more than ever by regulators, by employees, by customers, the public, for how they act and behave when they're under pressure. So with this in mind, Mariam, when we think about these different factors at play, what is it that organisations should be thinking about now as they start to refocus their compliance efforts and their priorities for the coming months?
Thank you. Well, as you alluded to, the reality is that, of course, the pandemic has changed every aspect of our lives. The question is, how have those changes affected the risks that our organisations face right now? And to answer that question, we need to revisit our risk assessments. We then need to know if there's any indication that those risks have actually crystallized. And to answer that question, we need to look at the relevant underlying data, so intelligent, targeted data analytics. And if we do that and see evidence of actual issues that have arisen, we need to understand and address the organizational cultural context in which that happens, so that we can make sure that our organizations are better protected in the future.
Learning to unmute myself, lesson one. So that makes good sense. I think, we're talking here about tools that I think will be familiar to most people on the call. They're nothing new, risk assessments, they're old hat, we talk about them all the time. What is it that makes now the time to start talking about them again? Jeremy, I know that risk assessments are something of a sweet spot for you. What would you say to someone who thinks, oh, risk assessments again, another call about risk assessments, just what I need? What would you kind of say to those people? Come on, Jeremy.
Yeah, I've just done the same thing. Part of the reason that risk assessments elicit this sense of absolute exhaustion from people whenever you talk about them is because a lot of the time, bluntly, they're massively overspec'd, and we forget what it's actually there to do. Part of it, yes, if you're a regulated entity, a risk assessment is what you might call, forgive me, a kind of regulatory fig leaf. You need it to keep your regulator happy. And of course, that's the approach, particularly from a financial crime perspective, where you're doing what it takes to keep your regulator happy. And if you can mitigate some bad stuff along the way, then yippee, that's wonderful. I've always thought that's the wrong way round to approach. And it also means that you look at your risk assessment in the wrong way, because actually right now, well-designed, well-undertaken risk assessment processes are coming into their own again, because the very definition today of a well-designed risk assessment process is simply one that helps you ask the question, what do I need to be worrying about and where do I need to be putting my resources? That's, to be blunt, that's all a risk assessment is from a business perspective. It helps you deal with the fact that you can't spend money, time, and thought on everything. So that's why we need to think about it right now when the risks are changing, when life is getting difficult, and bluntly, where money and time are tight. A well-designed, well-thought through, not necessarily massively big bang or insanely complex risk assessment process is what enables you to keep your business on track, to make sure you're spending money on the right things, and also, and I think this is a really critical point, to demonstrate why it is you're not doing stuff. We all know the old line that says, if you prioritize everything, you prioritize nothing. And I'm sure any of us who have been in large organizations have had awkward conversations with seniors who go, action this day, we must do this. And you say, okay, what are we not going to do? And they go, of course we're going to keep doing everything else. Can I have some more money? No, just get it. We've been there. Everybody's been there. So a well-designed risk assessment allows you to make the case, particularly in rapidly changing times like this, to make the case internally and to your regulators, if you have them, as to why you're not doing things. And that's, with my lawyer hat on, that's a fantastic defense to have.
That's good. I think people find it encouraging that there's a good reason that they can document not to do things. Usually it works the other way around. So we've been talking about, obviously the pressure people are under. And one of the challenges I find with my clients is getting people to be honest in times like this around what their real risks are. There's pressure to save face and deliver good news rather than getting down to the nitty gritty. How do you manage that?
Is this back to me again?
Yes, it is. This is still you, still grilling you.
Yeah, absolutely. How do I manage? Well, data and numbers are important. And they're also scary. And we'll talk about this more in a moment. And at that point, I'm going to step aside and let the real expert when it comes to the numbers and data, which is Emma, take the floor. But you have to get down and ask yourself genuinely, what do I know and how do I know it? And work with that. If you're honest with yourself about the availability of your data that you can feed into your risk assessment, then you can craft a risk assessment process to take a proper account of it and learn what you need to learn. As I said before, both to do what you need to do and to convince people as to why you're not doing what you don't need to do.
That makes sense. Now we are going to get into the data question. I think that's an important one, especially as we keep coming back to these questions around dynamic risk assessments and how do they happen, how do you do them? It sounds quite complicated. But before we do that, I want to go back to your sort of regulatory fig leaf, as it were. We think a lot about trying to keep regulators happy, and certainly from my experience, a lot of clients are interested in what good enough looks like. What is everyone else doing? What will be acceptable? and the difficulty of cutting through the theory to get to these things. Now, I wanted to ask you, Fiona, about, how do you cut through the theory and the legislation and actually get to practical solutions that are going to please the regulator but also be workable for your business?
I think that's a very interesting question, Nicola. And of course, if one looks strictly at the legal situation, companies and organisations have to have adequate procedures in place in order to prevent bribery. And there's been a lot of focus on that since the Bribery Act came into force. But what does that really mean in practice? And I think that can be quite overwhelming. I mean, clearly, companies and organisations can come to EY and to get some expert advice about that. But there are also a number of NGOs and other organisations in the anti-corruption arena, and have been for a number of years, both nationally and internationally. So a number of them publish, to my mind, very good advice, which is readily and freely available on the internet. And I think that that's a very important factor, because when regulators or prosecutors come to look at what a company is doing, to say it's all a bit overwhelming and therefore I decided to do nothing, or I couldn't afford to go and get some expert help, is really not going to wash, because that advice, as I say, can be obtained at the click of a button. You only have to look at Transparency International's publications. They, for example, do a business integrity toolkit, which includes a guide to adequate procedures. And personally, I think that's an excellent guide. They also publish reports on countries around the world, including the Global Corruption Barometer, which will at least give a company an idea about if they are going to be doing business with X country. Is it near the bottom or near the top? Is it a country that is said to be, particularly by people who live there, very corrupt? In which case you're going to have to keep a very careful eye upon it. So the guidance is out there, and not to have looked at it at all clearly is not good enough. But to look at it and to tailor it to your business, or to try to tailor it to your business, is at least a long way down the line. So the material is there, Nicola.
I think that's good for people to hear, and we obviously don't want to do ourselves out of a job, as you say, but there are very good resources available freely. But I guess if we think back again to regulators, I know in some respects of the last few years they've really started to up their game, and they've really started to get their arms around compliance and what a good compliance program looks like. And I know I've spoken to you, Emma, quite a lot about dynamic risk assessments, and I've had conversations with you myself around how do you do that? How do you keep refreshing a risk assessment over time so that it is dynamic? Can you help me there, Emma?
Yeah, so I think going back to what Jeremy and Fiona said, risk assessments can be as simple as capturing the relevant data into a spreadsheet and agreeing a systematic methodology. I think the important thing, first of all, is to make sure the right sources of data are being captured. So I think people always focus on their internal data, internal audit findings, investigations, whistleblowing data. But I think also, to the point Fiona made, it's important to have things such as the CPI index and other external data brought into that. As you said, the key part for me is the dynamic part. And I think a lot of organisations still view risk assessments as an annual tick box exercise. And if anything, COVID, I think, has demonstrated to us all the need for regular refreshes of that risk assessment process to identify those changes in their risk landscape. And it enables the business to quickly adapt and change their plans to focus on new and emerging risks. Just as an example, one of my clients had identified at the beginning of the year an ABAC risk around their travel and expenses for their sales rep as something that they wanted to focus on. And recently they've just refreshed their risk assessment again and adapted their plans. And they're now focusing on online meetings and virtual meetings, because they saw in the data a significant decline in their T&E spend. And so they've shifted their focus and reprioritized, which I think is critical for the business. And to your point, Nicola, I think data analytics and automation can definitely play a large part in enhancing that dynamic risk assessment. So one of my other clients has designed a series of key risk indicators, and they perform what could be seen to be as a health check on areas of the business. So if you imagine that each activity has a regular heartbeat, the KRIs are designed to ask the data questions across a key set of activities of the business, and they essentially check the pulse of them. So they set predefined tolerances for each of those activities, and then they monitor the data. And if there's a spike above or below those tolerances, the KRI will be flagged, and it will enable the business to look further into this and to understand if there's a new or an emerging risk or another activity, for example, that should be considered. And automation plays into this because it eliminates the need then for the data to be manually fed into the KRIs. So it means that the risk assessment can take place almost on a real-time basis and starts to reduce the burden on the business.
And I guess that would be really important now, as you say, you know, companies who were planning to test their expenses, you know, there's probably no point having done that since March, as we'd expect them to have dropped off dramatically. We're talking about, you know, risk assessments and data analytics. I think it could sometimes feel a little bit overwhelming. You know, there's a perception that it's big investment, big budget, complicated technology, you need tech specialists and so on. Is that your experience of, you know, talking about data and data analytics?
Yeah, I think for many companies, they're not alone in feeling that. I know, speaking to clients, that for many compliance functions particularly, it feels really overwhelming to be suddenly told to become this data-led compliance function. And it's largely due to the misconceptions that you just mentioned. So large-scale investment in IT, a different set of skills, time and effort as well for people to implement that. And of course, those elements need considering. So having worked with a number of compliance functions who have started their data and tech journey literally from scratch, I think there are some small steps that companies can take to successfully navigate those common pitfalls that many of the organisations fall into. If we've got time, we can share a couple of those. I guess the first one for me is around building a roadmap. So I think before starting to do anything, it's really critical that businesses step back and think holistically about the risks that they want to manage and the data that they already capture as part of their compliance programs. They need to consider questions such as if there are any enterprise risks or activities they think it should cover that it doesn't cover now. Example of this is if you think about the retail sector at the moment, obviously one of the emerging risks in the press recently has been around modern slavery. And I think now more than ever, retail sector and others as well need to consider this risk as part of their supply chain activity. I think second of all is to start small. I think companies get quite excited when they have an idea of what the roadmap looks like. They think they've got a team in place to deliver it, and then they go big. And that's sometimes where they fall flat. So I think some of the ones that I've seen that have been most successful have been where they've done pilots. They've been able to quickly identify and overcome roadblockers. So things like if it's a global company and they've got a specific local system that hasn't been included in the data extraction plan, that can start to be built in before it becomes too overwhelming to deal with. And I think finally is just around don't build in isolation. And I think this is actually a critical one for me. And so in my experience, embracing a data-led compliance program can have benefits for other departments outside the compliance function. We've worked with lots of compliance functions that have used exactly the same data as other ones, and they can drive value for the other areas, so finance, tax, procurement. And I think in consulting at the beginning of the journey with these departments to understand what insights they want from the data, it means you can start to build a data platform that will benefit not just compliance, but actually a number of functions across the organisation.
Which I guess puts people in compliance in quite an exciting position, you know. It's been a long time that we've been seen as a cost and maybe a burden to the business, but actually what we're saying is you can use data in such a way that you start to deliver sort of commercial value back to the business that kind of they really understand.
Yeah, definitely. I think more than ever, compliance functions that are using data are now being seen as a critical component of the business now, rather than just a cost of doing business. So I think compliance functions that do have access to data are starting to proactively call out areas of concern to the board and senior management. and it allows that business then to refocus and reprioritize their risk mitigation efforts. And I think, this is a key point for me. Like, historically, compliance professionals have been focused purely on what's gone wrong, and actually to drive the real value for the business, it needs to change its focus now from not just reactive and hindsight, but to foresight as well, whilst driving those insights and obviously still mitigating those risks. And obviously that will require investment in technology, and there needs to be a focus on what data is needed to really develop those more predictive insights.
Do you think clients are starting to realise that more and kind of become more okay with the fact they're going to invest in technology? Is it part of their plans and in sort of medium term?
I think so now. I think having spoken to a range of clients, those companies who have their compliance function had already started on their data journey have definitely seen that they've been able to navigate this period, particularly of uncertainty, better equipped than those who haven't.
That's good. I guess being remote as well, having to be more creative about how you might have done face-to-face or on-site testing and reviews in the past.
Yeah. Sorry, go, Mary.
I was going to say, just to build on that, a couple of points. The first around the potential of asking the data several questions and looking at it once, but with several lenses, and the value of that. Because, for example, you might be looking at a data set of, say, discounts, and we're looking at it from a misconduct lens. Does it look like there's excessive discounts because there is some sort of collusion? You might get the answer that there's excessive discounts, but actually the reason is the contracts are out of date. There is an issue around the commercial negotiations. So that value of thinking, what are all the questions that we can ask of the same data set in a way that will be valuable? The other point I was going to make is to the points alluded to earlier around thinking of risk in a holistic way. Historically, we would really think about, there was a tendency to think about risks in terms of silos and arising in kind of isolated ways. And the consequence of that was we were kind of playing a game of whack-a-mole. Something had come up, it'd react, deal with that, and then move on to the next thing. Whereas the reality is that risks tends to crystallize in sort of constellations of connected themes. So the supplier that's got the problem around the safety issues or the Modern Slavery Act issues may well also be the supplier that's got, there's got a high commercial risk, they're not stable financially, or an ethical risk. So to look at it as a whole and ask the questions in that way.
That is an absolutely critical point, because it also puts the stress on something that Emma said, which is it seems to me that the only way to do this well is to be the function as a compliance or a legal and compliance function that builds the relationships across the whole organization. All organizations inevitably get themselves stuck in the kind of silos that Mariam is talking about. Compliance has had a way of doing that sometimes and sitting in its little office and not doing the classic management by walking around where you plonk yourself, okay, you can't do it now because you can't go and sit next to somebody, but virtually, if necessary, retaining the relationships, getting to know people, understanding their business as a compliance professional or indeed as a legal advisor. Job one is not just to know our business, but frankly to know the whole of everybody else's business as well. And that's a big ask, but it's critically important. And one of the reasons it's critically important is because in all of this talk about data analytics, 2 points I think need stressing. The first is not only the organizational and resource dividend that comes from getting this right, but a greater and greater legal and regulatory dividend. And the reason I mention that is, particularly from the US, those of us who follow FCPA matters and the fraud section in the Justice Department will be aware that a couple of years ago, they introduced something called the Evaluation of Corporate Compliance Programs. It was the first ever compliance counsel, Hui Chen, who first introduced it. I have to declare an interest here in that I used to work for her, and she's a friend. But she introduced this, and it revolutionized the way that the Justice Department was understood to look at and measure how compliance programs work. Now, they've just revised it last month, and one of the revisions was a much greater emphasis placed on how you use your data and how you evolve your response to that data. Now, where the Justice Department leads, everyone else follows. I think we can probably agree on that, particularly where it comes to compliance as it relates to financial crime. So this is a very clear indicator that putting time and thought into getting your data right and what you can learn from it is what is going to keep the enforcers off your back. Equally though, and this is just one very brief point, for those who are terrified about the thought of the big data and what they don't know, and what they don't yet know, and how much it's going to cost them to get to know things, the fact is you know much more than you think you do, and your organization knows much more than it thinks it does. The relationships I was talking about, if you work through those relationships and ask your colleagues, whether they're internal partners or you're an external advisor that's helping think this stuff through, ask what people do, ask what they already know and work with. And you can start with that, and you'd be very surprised, I think, at just how much you'll learn by amalgamating and using the data that pre-exists that various bits of the organization are using for their own ends. It'll help you build that picture that I think Emma was talking about of what's normal and where the boundaries of normal are, so you can identify the outliers. And again, and I know I keep talking about this, but I think it's important. And again, therefore, work out where your resources go and where you get the best bang for your buck, and critically, of course, where you get the best bang for your management attention.
So I think that's great, and I think we've talked a bit now about using risk assessments, using your data to identify issues, to anticipate issues, which I think something that as consultants and legal practitioners we're all very good at doing. We're good at finding problems. But what about actually trying to solve them? I want to turn to you, Mariam, to understand what is it that organisations should be thinking about now to get to the root cause of some of these problems and to stop them reoccurring again in the future.
Yeah, I think crises are great revealers of what was already there, and I don't think this crisis is any exception. I started my career in forensics at the tail end of the investigation to the collapse of Barings Bank. And what I heard then was that this was an extraordinary situation. There's one bad apple in a remote location, an outlier in every sense. Except that in the ensuing years, I heard variations of this explanation over and over again in different countries, different industries, different types of issues. And my observation is that where there are systemic issues, it's never about just a few bad apples. It's almost always about weak leadership and poor culture. People don't, we can recognize this from our own experiences, people don't wake up one morning and decide to do the wrong thing. It generally starts in a small way and it grows. And the reality is that our ethical lines move without us realizing. And the beginning of that often starts with a conflict of interest. So from an organizational perspective, the question is, where in our organizations do we ask people to follow the rules and give them an incentive not to? Because that's where we should put some signals and sensors in the data and be looking first. We did an investigation where the previous management of a company had been signing up to some service level metrics in contracts which were operationally almost impossible for their staff to meet. So, of course, it's ended up in a level of misreporting, which in internal emails they called updating the numbers, revising the numbers, because misconduct always has a euphemism. If we saw it for what it was at the time, we wouldn't do it. And the culture and leadership role models in the business act either as a brake to that behavior or an accelerator. And we need to have an insight into that.
Yeah, and I think the point there around the culture and the leadership is really interesting. I mean, I know that very recently EY's done its own global integrity report where we've asked businesses some of these questions. So asking them, do you believe that in your organization employees can report wrongdoing without the fear of negative consequences? And one of the interesting things that we saw there was, I think it was about 60% of juniors thought that you could, but 70% of board members agreed that you could. So there's a gap there between what more junior people think and then what the senior leaders think. And similarly, I think we asked a question around whether or not management speaks enough about integrity issues and the importance of behaving integrity to reinforce it. And there the split was more like 1/3 of junior employees thought that they did versus 2/3 of senior employees. Is that something that you see sort of reoccurring in your investigations?
So just to also put those numbers into context, so these are based on interviews initially with 2,600, and then we went and did another 600 interviews around the world. We commissioned Ipsos Mori to do this. We wanted the samples to be statistically significant and cover both different types of businesses, but also board, middle management, and more junior employees. I think comparing the responses from the board and the employees was really interesting on both the gaps and the consistencies. So that last point, that around 1/3 from the top to the bottom of the organization agree that, for example, high performers get away with unethical behavior. So if that's the case, even if the board does frequently talk about importance of integrity, why would employees listen? Why would anyone blow the whistle about someone who's bending the rules if they're delivering results? And I think we can probably recognize, if you think about announcements for new board members or new CEO announcements, how much of it generally is about how much they grew their last business unit versus the track record of personal integrity that they bring to the role. In a practical sense, in my experience, this is often a symptom of organizations where there isn't a balanced set of objectives. There is a single dominating objective, which means that as long as you're striving towards that, the means justify the ends. There is a single focus, and so the different ethical dimensions of decisions can fade away. And the practical question would be, where do we have this situation in our organizations, and examining underlying information about the reality of the behaviors that it's driving.
I think that's really interesting, and I know that in our line of work we're hearing more and more people talking about behavioral science, and I know that that's something that Fiona is very interested in as well. I wonder, Fiona, in light of what Mariam's just said, if you have any reflections on how we can start using behavioral science in our work.
Yeah, I totally agree with that. And it's interesting that the UK regulators have been promoting a behavioural science-based approach to compliance in recent years. Behavioural science, for those who don't know much about it, is a sort of multidisciplinary subject, and it basically looks at, or it can form a complementary framework in compliance to look at the ways in which individuals are motivated to act in a compliant or desired way, rather than putting in very rigid rules which are clearly not going to meet every situation that people come across. So just to give a sort of up-to-date example about how this can work, there's been, as we know, much debate in this country about whether people should wear face masks or not in the current pandemic. And the government has sort of moved backwards and forwards as to whether to make it mandatory or desirable. And what behavioural scientists are saying about it is that if all public figures were seen all the time wearing face masks, it would then become the norm to be wearing face masks, and anybody who is not wearing one in a public place would become an outlier, and therefore it is nudging behaviour towards compliance rather than prosecuting people for actually not wearing face masks, which is less effective. And therefore behavioural science can be applied to the way that people act within companies in order that it's used. We've all heard of nudge thinking, but what that does is it uses positive reinforcement and indirect suggestion in order to make people behave, or not make people, in order to influence them to behave in a compliant way. And that also feeds into another interesting phenomenon, which is called groupthink, in which being in a group can actually change people's behaviour, either for good or for bad. And therefore that's one of the great importances of tone from the top, because if senior management are seen to behave in a compliant and an ethically sound way, that is going to feed down the organization, and therefore it will influence the rest of the people in the group to bring them in line with those around them. And that also brings on to the fact that in an open culture, an open firm culture, where staff, particularly more junior staff, are encouraged to speak up, then decision making is enhanced and risks are flagged up. So behavioural science has, in my view, some real value going forward.
I think that's really interesting, and I guess talking about, tone at the top and how significant it is, I guess it makes me want to put Mariam on the spot a little bit. Obviously, Mariam, you are a leader in an enormous global organisation. Given what we're hearing about the importance of tone at the top and some of the findings we've had from our own surveys, how do you feel about that at EY in terms of, is there a disconnect between senior tone at the top and junior perception? Do you worry about being distanced from the more junior members in your team?
I think I have, having been at EY for over 20 years, I have a perspective both as a partner now, but also at all the stages along the way, because I joined EY as an entry-level forensic analyst. Today, we employ just under 15,000 people in the UK alone. If you think globally, it's about 270,000 people. So it'll be, if the chairman of our firm as a whole, how would he kind of have a perspective on that? So of course, we must keep connected with our teams across the board. And given the size of our organization, in common with many of our clients, that can be a challenge. I think creating a culture that supports network structures in addition to the hierarchical ones can be really effective. So, for example, when recently we needed to hear from all of our people about how they felt about coming back to the office, we connected through a set of networks across the firm. And in that way, we got to hear directly from over 1,500 people in that way. So I think it always comes back to leadership and culture, and choosing to, as opposed to mandating something, and this is why I feel very strongly about the word compliance. I think that terminology will change over time. Choosing to talk to and importantly listen to each other and creating a culture in which that's accepted. And I've experienced that over the past 20 years. I think anyone who's been in a law firm and an accounting firm would have experienced those changes, those cultural changes.
And I know you often ask me slightly pointed questions about what I think about uncomfortable topics, so I'm just returning the favour here live on this webcast.
I didn't say what I said to you before that. I'll say you're a direct northerner.
Yeah, that's why I'm moderating this. That's how Mariam has stereotyped me. Direct northerner who's going to ask all the different questions.
Best possible way.
If I could just jump in there for one second,
do.
Nicola. I think both from the point of view of the sort of cognitive biases that affect how we deal with one another and the positive use of those cognitive biases, as Fiona's been talking about, and the cultural issues that Mariam's been talking about, there's always a critical thing to bear in mind, is that human beings, whether they're employees or members of a family or whatever, have what I'd call a maximum hypocrisy tolerance. We're all aware that human beings are hypocrites, and anyone on this call who's a parent will look in the mirror every morning, and if they're honest with themselves, will admit that they're going to be hypocritical with their kid or kids a certain amount of the time. I hold my hands up to that. If you asked my daughter, she would tell you right out. That said, there's a sort of maximum level of hypocrisy that people can cope with. And I think the cultural problems in an organization really emerge when it gets past that sort of tolerable level of hypocrisy. And that's when everybody stops listening to each other. And actually, the tolerable level of hypocrisy is higher if the active listening process that Mariam has been talking about is a part of the way the organization works, because then everybody is aware that people are human, that mistakes get made, that nothing is always altogether consistent. That's the point at which, when you've had these conversations across the organization, when you've got a compliance function, and I don't like that name either, that's doing its job and being part of the connective tissue of the organization, that's when if you like, the hypocrisy tolerance goes up a little bit and gives you a bit more wiggle room. So it's worth aiming for that reason as well.
Yeah, and I think as we say, recent times have reinforced more than ever that things don't always go to plan. You know, I always think back to that poor chap on the BBC whose children burst into the room mid-interview, and he really was a trailblazer for what many of us have experienced since with all the working from home. So I'm conscious of time, and I want to make sure we have time to address some of the questions that we've been getting in over the chat. Encourage people to keep submitting those. We've got 15 minutes left. The first one I want to ask around is actually a question for Emma. It touches on data, and it's around the current pandemic, the fact that, you know, job losses are a serious reality for a lot of the businesses in this country and around the world. You know, is now really the time for companies to be thinking about data and investing in that data? And if it is, you know, how do you persuade people, leaders, that it's what they should be doing?
Thanks, Nicola. I think it's a really good question. I think, as we alluded to at the beginning of the presentation, I think when people talk about investment in data, it doesn't have to be this large-scale transformation of IT at the beginning of the journey. I think the way that I view how compliance functions can demonstrate their insights is just by looking at a basic level the data that they've got access to, and asking the data those questions to help identify those risks. So as an example, I was talking to one of the heads of procurement in the consumer sector recently, and they'd mentioned to me they'd had a 40% drop in the number of third parties being onboarded during COVID, but they couldn't really explain to senior management why. So what was the reason behind this? As the compliance function, they had access to the vendor master file data, the accounts payable listings, so things that are readily available to all compliance functions. And what they were able to do is identify that, in fact, going through those, they'd seen a significant number of new third parties that were being paid by matching that across to their other listings, but during the period, and they hadn't gone through the onboarding process. So actually, what the compliance function, with, you know, very limited data, they hadn't invested in a huge amount of analytics. It was just cross-referencing some of the extracts of data that they had access to, and they were able to then prioritize which third parties needed retrospective due diligence on for the procurement team, and also provide an answer to senior management around this. So I think I totally understand the concern around job losses, etc. I think compliance functions, and maybe Jeremy or Fiona can add around the legal lens, I don't think regulators are going to stop looking and asking questions of companies around what they're doing around compliance. There still is a requirement to be looking retrospectively and proactively around where their risks are. And I think the critical thing now is it doesn't need to be a huge investment right now in terms of the data, and actually looking at what you've got in your existing capabilities, and just, as I said, asking those pertinent questions of that data is a great starting point to demonstrate to the business what insights the data can give, and how the compliance function can become a strategic partner of the business.
I think that's helpful.
Which, of course, Nicola, I was just going to say, which, of course, just from a deeply enlightened self-interest, let's call it enlightened self-interest perspective, for any legal or compliance professional, the more you're adding value about knowledge about the way the business works, the less likely it is that you're going to be on the list of redundancies. Forgive me for being so blunt about it, but hey, it's true.
Yeah, I think it's good. You know, I think that we're here for real talk, and that's, I think, certainly a consideration that we need to be bearing in mind.
Just add one point to that, because I think at the heart of that question was about, you know, investing, because it's, you know, even if you do something small, you're making a choice in terms of time, at least, if not money, to do something, and the importance of keeping focused on why you're doing it. So anything, data analytics is just another thing, it's another tool. It's got to be part of a bigger purpose. So, for example, the question is, we're really worried that during this period, we've taken on suppliers that are providing goods to us that might put the safety of our customers at risk. So we need to go back and look at that data and make sure that we didn't take on anyone that, you know, we previously rejected before because there was a safety concern. That was a real case that we came across recently. or our legal obligations in relation to sanctions and the entities with which we are allowed to do business, because that is the law, didn't stop during the pandemic. But we did have to respond. So did something fall through the net? So it has to be to a bigger purpose that matters to the purpose of the organization in all things, and data analytics is just one other thing.
Yeah, so it's not data and technology for the sake of it. Right. It's to do things we already have to do, but ideally better, faster.
Yeah, to do something you care about, because if you can't answer that question, then that work shouldn't be done, because it doesn't make any sense.
I think that's really helpful. We have a question here around some of the more practical examples of what does good enough look like in a compliance context. And I think this is coming from, we say earlier there's lots of guidance available, but sometimes it can still feel challenging to translate that guidance into something relevant for your organization. And the person suggesting actually that DPAs can be quite useful to look at DPAs where companies are working directly alongside regulators to kind of rectify compliance gaps and issues. I want to ask the panel, and perhaps this is one for you, Fiona, if you have any sort of insights of how we can learn from DPAs and what others are doing to improve our own programs.
Well, it's an interesting question. I'm mindful of the question in the chat from Fiona Vickers asking for positive examples of where companies have benefited from compliance, which I think is interesting. And I suppose those at EY might have some really practical examples, but I mean, I can certainly think of reputational enhancement, the fact that that people these days are much more concerned about what companies that they are buying services from are doing in the background. So that might be a positive example. DPAs, I'm afraid, perhaps it provide negative examples, because those are situations where companies have been investigated by the regulators, particularly obviously by the SFO, and have had to admit to criminal activity and have come to an agreement with the regulator. But of course, that only happens when that company is fully engaged with the regulator and where they have put in place proper procedures to ensure it doesn't happen again. A DPA which was signed off at the beginning of this year is the infamous Airbus case, and if one reads the facts of that case, they are really very interesting, because Airbus did in fact have anti-bribery policies. It did have committees that were meant to actually examine matters, but somehow, even despite that happening, there was wide-scale bribery going on when they tried, or where they were selling airplanes to many countries across the world. But what was really interesting with Airbus was that once legal and compliance played a much greater role within Airbus, that was at the point that Airbus came to examine what had been going on in the past and uncovered some wide-scale bribery, which of course was then reported to the regulators. So that is a pretty stark example of the value of promoting compliance in a company.
There's also the nuts and bolts. I mean, I think it was Emma who was talking about what happens if you're looking at a vendor master file and you're finding spend going in interesting or awkward directions. And yes, from a strict compliance perspective, that could be an indicator of inappropriate or unlawful or illegal conduct. But working with, again, I know I keep banging this drum of partnership and getting to know people, but I do think it's one of the most important and overlooked elements of a really good compliance function, whether an internal compliance function or an external advisory function, like many of ours are. Because getting to know them, getting to understand what's worrying them, and then sometimes adding your voice to their concerns. Because if there are compliance or legal or ethical concerns that run alongside or in parallel to their concerns, you can help them strengthen their voice. And that has two things. Firstly, maybe it resolves a problem that the business already has in terms of suppliers that are too expensive or out of date, or an HR issue in terms of behaviours that need to be dealt with, particularly with the absolutely right and justifiable eye on certain kinds of behaviours and treatment, whether it's of minorities or of sex and gender issues or of a number of other things. We can add our voice and our strength to those points, make the organisation stronger and better as a result, whether from the inside or the outside. And those may be marginal or small improvements, but we can be assistants and allies in order to help people make beneficial change by adding our voice to theirs. I've seen it happen a number of times, particularly actually, as I said, in the HR space. It can really help improve behaviours by just another shoulder to the wheel.
Just a comment, the way the question was framed about giving examples of the benefits of compliance really brought to mind a comment that a compliance colleague in an organisation made. And she said, you know, I feel that I'm regularly asked to prove the value of compliance. No one's saying prove the value of the sales team or the value of the markets team. And she was asking that, she was saying that because her bigger point was, what does the leadership of my organization, how does the leadership of my organization view this function? And can we be empowered to be what we need to be, to Jeremy's points about being side by side of the business and understanding and being embedded in the business. And I would just make that comment that does need sort of empowering by the leadership to say, this is how we see this function. This isn't a siloed function, sort of a tick box function. For the compliance function to be able to do all of those things, it needs to be empowered to do them. And that's when we see all the examples that have been mentioned, being able to add value in all sorts of ways.
And we've got a question here about compliance functions and whether or not they can still be effective with remote working. And thinking about what you said then, I know that again from the integrity survey that some of the responses indicated that there's still quite suspicion and sort of mistrust of people working remotely. Can you kind of comment on that, Mariam?
Yeah, from memory, there were responses that you could understand, because people would say, oh, because there's operational pressures, you know, you have to do things, cut corners, so there might be ethical issues. But the top answer was that 90% of the respondents said that remote working was a risk to ethical conduct. And I think we come back to some extent to sort of where we started about, well, if there is a culture of mutual accountability and trust, why would that be a key concern? Just because you can't see people that you're concerned about their conduct and behavior. So I don't think this is the thing about being a great revealer. I don't think the problem is remote working. I think when it's being mentioned as being a problem, there's a deeper question about what is wrong with the culture that makes you distrust people.
And I think
just because working circumstances have changed.
This echoes a comment here we've got from Graham, which is, you know, as a global compliance leader, you're always having to manage things remotely and not going to be in every country in your organization. And again, driving home that point that it's all about really the culture of your organization.
But I think, Nicola, it lends itself to all three things we've talked about today, hasn't it? Because you need to have the access to the data. You need to have a good risk assessment in place to make sure that where you prioritize your focus is, you know, and you can get on site, or you can, you know, allocate your resources. And then, as you said, and then you need to have the right culture. So I think in terms of being effective, all three things play into that.
I think that's right. And I guess it's something that we're finding as well, right? Even within EY, working more and more remotely and changing how we've been doing things. Although we're a global team and we're used to it, you know, not being able to sit, for example, face to face and sort of sketch out the outline of this webinar, you know, just getting used to different ways of working together.
And I also think, Nicola, as well, there's something about working remotely which now has meant that Zoom and Teams is being used and videos, etc. So actually the accessibility and building those relationships has become even more important. And so I think actually now is the time to, as Jeremy said, build those relationships. I think that could actually make a compliance function and the silos being broken down with other functions even stronger, because people are recognizing the time the time and effort that's required to invest in those relationships and how beneficial they can be.
Yeah, I think that's right. And I guess maybe that is, you know, a specific type of technology that companies are investing in now, this technology that allows us to be communicating even when we're remote from each other. So we've got 1 minute left. Unfortunately, we have got more questions that we weren't able to answer. We'd be really happy to get back to you individually. I think Jamie's going to share our contact information now as well, to make sure that you can get a hold of us if you want to follow up on any questions or talk about anything that springs to mind. Give a shout out as well for the webinar that's coming up next week, which is more focused on managing investigations frameworks and associated risks there. I'm sure it'll also be a stunning panel, although you will be graced with a new set of EY and outer chamber faces to occupy you for an hour. It's brilliant to have had all your time and attention and to have had these wonderful panelists with us. Of course, the session was recorded, and I think you'll all receive a link to the recording afterwards, which you're very welcome to share with colleagues, friends, family members, anyone else who'd be interested in these topics. And I think that just leaves me to say thank you very much and have a wonderful afternoon.
Thanks to everyone for coming.
Thanks,
Thanks, panel. Thank you. Goodbye.